How's it going, everybody? KCG Trades here, and with the overall market currently in correction and not much to do trading wise, I thought I'd make a video on a long-term investing strategy that is not only simple but very effective for the long term. Before I continue with the strategy, I want you guys to smash that like button, comment down below, and if you're new to the channel, please hit that subscribe button. Thank you for everyone who's been supporting me, watching my channel, and just want to let you guys know 2022 is going to be a big year, so if you haven't already, hit that subscribe button. Let's go. So there are two things you need to properly execute this strategy. One is a charting platform. As you guys see in my background here, I'm using Questrade, but later in the video, I'm going to show you guys 3 free charting resources you could use. And number 2 is a moving average. So if you guys see these lines here, these are all moving averages. These are kind of indicators in terms of the average price over the past certain amount of days. I want you guys to use the 200-day moving average. So if you see here, this red line here is the 200-day moving average, and I'll actually show you guys how to implement them on your charts as well. So those are the 2 things you need to implement this strategy. So firstly, I want to answer why the S&P 500. So if you guys don't know already, the S&P 500 is kind of like the benchmark of the overall market. So when people talk about how the market did today or how it did yesterday, being up or down, they're usually referring to the S&P 500 along with the NASDAQ or maybe even the Dow Jones. So for this video, I want to specifically talk about the S&P 500 and what the S&P 500 specifically is. It's a basket of the 500 best companies in the USA, and it's constantly changing. So when a company is underperforming or it's not as good as it used to be, the S&P 500 kicks them out and adds a new performing stock, a new better stock. As you guys know, recently Tesla was added to the S&P 500, etc., etc. So always the best stocks are added to the S&P 500 and the weaker stocks are always kicked out. So what that means is over time, the S&P 500, the index always goes up because you always have the best of the best in the index. As if you see here, I have a 10-year chart pulled up for the S&P 500, and I actually went back all the way to 1994, starting at a low of 43.34. We're all the way now to 479. Year over year, with all the crashes we've had, we had the 2000 dot-com bubble crash, we had the 2008 housing market crash, we had 2020 COVID crash, and look, we're still continuing to make new highs. And it doesn't mean every year the market goes up, but what it means is over the long term, the market does go up. And with the strategy I'm going to show you guys, this is a way to capitalize when the market's in a downtrend, in a correction like we are now. And this is also a way you could have bought in the 2000 dot-com bubble, during the 2008 market crash, during 2020 COVID crash, or anytime there's a significant correction. And please be aware, with this strategy, I'm only referring to the indexes like the S&P and the NASDAQ. I'm not talking about individual stocks. It is dangerous to play this strategy with individual stocks because any stock can go to zero. Doesn't matter how good the company is, any stock can go to zero. But with the indexes, the S&P 500, it will always go up in the long term. So please be aware and be careful when investing in individual stocks. So to answer the question of why the 200-day moving average on the chart, the reason is the 200-day moving average is basically the average of overall price within the past 200 days. And it's used as support and resistance in overall uptrends and downtrends, and it's kind of like the last line of defense for the bulls and for an overall uptrend. So every time the market goes below the 200-day moving average, you kind of have an assumption that the market's in correction, the market's in a downtrend, there's fear in the market, and that's basically the best time to buy. So if you haven't put the pieces together already, this strategy is essentially buying the S&P 500 every time it gets below the 200-day moving average. So to show you on my charts, I have the daily chart pulled up here, and this is key. You want to use the daily chart. Some people use the weekly chart, and you could use the 40-week moving average because 40 weeks weekly turns into 200-day moving average. So you could use that, but I want to show you guys in the simplest terms, easiest way possible, just use the daily chart, 200-day moving average. You could add it to your chart by just going to studies. This is Questrade only, studies, moving average, and just add the 200-day moving average, apply, and it will show this red line here. You could change the color if you want, and I'll also show you guys other free platforms that you could use to add the 200-day moving average. So for me, this chart here is the 200-day moving average with the S&P 500. So if you see, as of today, January 23rd, 2022, we're below the 200-day moving average. We sliced through it on Friday's trading day. So this is something you really want to pay attention to because this is the time to kind of get excited to put your money to work. So what you want to do is just take a look here. Let's go back to 2018. Let's say we started investing in 2018. And every time the S&P touches it or goes below it, we want to buy. Now, like I said, this doesn't mean you're going to get rich overnight. This doesn't mean you're going to make money right away. This is a long-term approach, and this is something where 10, 20 years down the road, you're going to be happy that every time it went below it, you invested in it because over the long term, like I said, it always goes up. So to analyze it here, say we started in January of 2018. We had a little correction in beginning of January 18, touched the 200-day moving average. You could have bought some there. It might have been tough to buy it here, so we'll take this as a pass. For this one, we could have bought it here in April of 2018. As you see, we undercut it below it, and we had a few sessions dabbling around it. So this could have been a good time to just have initiate a position. Another time would be May of 2018, again bouncing off the 200-day moving average, as you see. But that's okay. You continuously buy. Right now, your average price, if you continuously bought, would be around the 260s. And now we just wait for a couple of months. You make some money up to the 290s, but you don't sell. This is a long-term investing approach. So yeah, like I said, you could be down for a while. You maybe not make money for a little bit. And if we see here from February 2018, the next year, October 2018, same year, October 2018, all the way to December 2018, we had a pretty big correction, and it actually went below the 200-day moving average multiple times, and we had a big downtrend. So if you take a look here, you could have bought any time here and you would have been fine. Like I said, don't think about the short term. Don't think about the short-term gains. Don't think about the short-term losses. Every time it's below that, you want to continuously add and accumulate your position. October 2018, you could have bought some here, could have bought some here. November, could have bought some here. Again, beginning of December, could have bought some here. Everything is below this 200-day moving average, and it continued into the end of December all the way down to Christmas. Had a pretty big sell-off. That's when you want to get the most excited. Anytime there's a big separation from the 200-day moving average, that's when you really want to put in a lot of your money, like big amounts of money, because the market will go up eventually. So just be patient, and that's what's going to happen. So that's what you did. If you bought some more here significantly, continue to buy until it went back up. Now you just wait and hold until you get a next opportunity. As we see here, we had a nice uptrend continuously rising, came back down again back in 2019. And if you see here, if you continuously buy, you're accumulating a lot of shares between the price of 240 and 275. We're obviously not going to catch the bottom, but hey, if you're lucky, go for it. Anything between 240, 275, you're buying, which is great to see. And then for the next couple of months, you see here, continue to rise. Now we're in the 300, 330s. You're making some money. But look, like I said, long-term approach doesn't mean you're going to make money right away. COVID crash happened. We had a huge drop from 339 all the way to 218. But look, your average price is still in the 250s, 260s, so you're not down that much. And look, this is another opportunity to buy again because you're below the 200-day moving average. Anytime you're below the 200-day moving average, you want to accumulate your position. So you buy some more here, buy some more here, buy some more here, buy some more here, buy some more here. Your price is below 300. So as of right now, no matter where you bought, no matter how many times you bought, your price is below $300. And after COVID 2020 crash, we know what happened. We had a huge bull market. A year and a half, we didn't even come close to the 200-day moving average. Continued higher, all the way to 400s, 460s. If we take a look here, continued all the way to a high of 479.98. And think about it, your price is below 300. So you have a huge cushion. You're making tons of money right now. And look, as of today, we're below the 200-day moving average. So this is another opportunity to accumulate your position, to buy more shares. And definitely we could certainly go back down. We are only about 9% away from the top. So we could continuously go down, maybe 15%, maybe 20% down, continue to drop. But as investors of the S&P 500, that excites you. That gives you opportunity to buy more. So the more it drops, you want to buy. As of Monday, you could even buy this if you'd like, and just continue it just to hold over time. And that's it. That's the strategy. Every time it gets below the 200-day moving average, you buy. Now that we've gone over the strategy, I want to talk about what actually to buy in your account. So the fact is, we track the S&P 500, but we don't buy the S&P 500. So we track it, but we buy ETFs similar to S&P 500. So if you're Canadian, we want to buy the FVV.TO, which is the Vanguard Investments Canada S&P 500 Index ETF. So this tracks the S&P 500 and mimics it. And basically, you want to make your executions on this stock or this index, essentially. So you want to track everything with the S&P. And when the S&P, not this, when the S&P is below the 200-day moving average, you want to buy the VFV.TO. If you're Canadian, if you're American or if you're a Canadian with an American account or anywhere and you have an American account, you buy the VOO. This is also an index fund that tracks the S&P 500. So that's the two things you want to buy. If you're Canadian, VFV.TO. If you're American, VOO. Now, lastly, I want to talk about 3 free charting platforms you can use if you don't want to buy one or if you don't have your own. And it's very easy, very simple to use. So first things first, you want to go to finviz.com. I'm sure many of you are aware of this site. It's an amazing website, completely free. You can pay for some extra services if you'd like, but the free services is just as good. So you search up SPY. And right away, it shows you the chart. This can only show you the daily chart, but it automatically applies the 200-day moving average for you. If you take a look here, it shows right here the SMA 200, which is the simple moving average 200, and it shows on the chart here. Very hard to read. It's kind of like I don't know what color that is, like a mid yellow orange, but it does show on the chart, and you can use it to signal your buy and sells. And if you take a look at another website, we could use stockcharts.com. This one has a smaller chart for free, but if you just go to SPY, click update, it shows you exactly the chart as well. And what you could do is overlays. So if you see, it automatically applies the 50-day moving average and the 200-day moving average. If you only want the 200-day moving average, you could clear all and just go to overlays, simple moving average, change it to 200, and then click update, and it'll show on your chart. So only the 200-day moving average is showing on the chart. This is another good website that I use, but the best one I use for free charting would be investing.com. Simply, you just go to charts, and they have everything for you. You could just go to ETFs, and the first thing is the S&P 500. It's a little bit complicated to get to it, but it's the best free resource. Now it shows you the chart here. What you want to do is click technical chart, and then you want to go full screen, and then you want to click candlesticks once again, and then for your studies you want to add the 200-day moving average. So you have to manually add it. You just want to click indicators. You search up moving average, and then it shows automatically applies the 9-day moving average, and you could change it. Click this little symbol here in the middle, change it to 200, and click OK, and it automatically applies. So it only shows from 2021, but it shows you the 200-day moving average and current price, which is all you really need. That being said, that's the strategy. It is very simple, very easy. There's literally no excuse for you not to be able to find it, not to be able to get it, not to be able to really understand it because of how simple it is. All you really need is a chart and a 200-day moving average, and obviously a brokerage account to make your buys. But that's pretty much it. I hope you guys learned something. If you have any questions, leave a comment down below. If you haven't already, hit that like button, smash that subscribe button. Any support would help. I truly appreciate it. And follow me on Twitter at KCG Trades for live market updates. And I hope you guys have a wonderful, wonderful, wonderful day. Take care.